Good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, August 23rd. Michael Boutros here with you this morning. Great to be here, guys. Jaya, Kamal, Mark, Marco in the house, Peter, Pete, and Peter. Ty, great to see you guys this morning. So, last webinar of the week, lots to cover. So the dollar is getting a little bit of a bounce. Not surprised. Shouldn't be a surprise. We were highlighting some major levels. On the daily, on the DXY, 95.15 was the level last, the November highs from last year, but also on the euro, you came into structural resistance from a slope standpoint in the daily on the daily chart. So you're getting a little bit of a kickback. Don't want to get too aggressive on the kickback. I still think there's further continuation to go. So we'll take a look at DXY and the levels there. Dollar yen looking for resistance basically at the high we just made. Maybe one last stretch into 111 that is, but we're looking for an exhaustion trade there. Dollar Swiss, nice rebound off support yesterday. Actually, I had a little poke at that on the long side. Came into initial resistance and backed right off. So take a look at those levels. And gold, okay, absolutely critical this week to watch where gold closes. So we'll take a look at those levels. We'll circle back and take a look at Euro, Aussie. Pete, I got you on Kiwi. Pete, was there a time period press there? Did you want me to cover that early in the session? Let me know if you're in a position there and need immediate help. And we'll take a look at dollar CAD and sterling. I don't like either of them, guys. I know dollar CAD, we do have an entry on the swing trade yesterday, but both of those are a little bit hairy for me at this point. Sterling, again, I do think that we've made some sort of near-term low. There's more upside to go, but how to play it from here is kind of tricky. So we'll take a look at those levels. Any trade that you didn't hear mentioned, or if you have any setups that you'd like to review, guys, at any point, feel free to throw them on the message board as always. Let's jump right in. I do want to take a step back and take a look at the DXY. Here's the daily chart from the 21st or Tuesday. 95.15 again is that swing high from November of last year. You caught those highs earlier this year on a closed basis. You got one probe through here before the break, saw support. It's basically where we ended up yesterday. So also note the 50 line for the current operative upslope that we've been following off the lows from this year and last converges right there as well. So you're seeing a little bit of a bounce here. All things held constant. We're still working on the assumption that a little bit more of a concerted high is in play. So, dollar could get some more recovery, but ultimately we're still looking to fade that. Now, I do want to note, look, there's not any major data on tap per se. You do have some house price index coming out at later today in the U.S., new home sales. The big thing that everyone is going to be looking at, we talked about earlier in the week, so I don't want to get into it again, is Jackson Hole, okay, Wyoming, and the economic symposium there. See if there are any comments that come out of Jerome Powell. So that is on Friday, right? And into the weekend even, but the comments from Jerome Powell will be on Friday. So we'll see, if it has any potential to interrupt this dollar move. All things held constant, resistance still 95.65. Here's what the intraday chart looks like for DXY. Okay, real nice slope. We highlighted this yesterday here in the webinar. So basic slope resistance off the highs, some parallels there, caught some really nice moves, break, saw resistance, lower parallel, keeps the focus lower, sub 95.65 near term, even if we get a topside pop here. But this is certainly a level, okay? So you're looking at 94.96, 94.92. This is a basic 236 retracement of the advance off the lows that we made back in February. So for the year, the entire yearly range in the DXY, 236 is right there, okay? It's also the 618 of this near-term advance, which would entail all of July trade. So retracement of the monthly range also gives you 94.96, 94.92. It's exactly where we bottomed out. Looking for resistance into 95.65. All right, so wouldn't be too surprised to see a little bit more of a recovery in the DXY, but ultimately, the broader risk is still lower. Questions on the dollar? Not much really going on here to get excited about, but certainly from the downturn that we saw, this is the first area of sort of initial support that you would look for, and we are getting that reaction now. So let's jump into last night's update, and again, interestingly enough, DXY, the dollar yen, still my favorite trade. It's been really clean, guys. We talked about this yesterday. The rebound off confluence support had us testing weekly open resistance yesterday. And certainly we noted that there was a little bit more of an upside risk near term while above this slope. We were looking for 110.80, 110.96 for possible exhaustion re-entry on the short side. So you got the top side break in overnight trade. You took out 110.80, rallied just shy of 110.96. Here's what it looks like now. We're kind of turning just ahead of that. So I'm basically looking to confirm a high here, early in US trade. Now, the thing that does get me a little bit concerned is that at this point we have broken the weekly opening range highs. You never really got a test of the weekly opening range highs, you just kind of plummeted lower. So I'm hesitant to get too aggressive to try to fight this, but I am looking for entries on another stab higher here in US trade. As long as we hold 111, a stop against Friday's high would be the way I'd play it. Ultimately, look for a move back into weekly open support that converges on basic slope, still at 110.59. So maybe one last stretch higher in the US session, to try to get that stretch into 111. You were getting decent divergence here if you were an overnight trade. This was actually a pretty decent signal to be on the short side. So if you're holding shorts already, a break-even stop into the US trade session is not a bad idea, but ultimately you want to have a stop against 111. So if you're comfortable holding that, I want to see if this thing could finally make a move to the downside. Bear with me one sec. I want to see what this looks like. All right. So 38.2 line of that extension, extending off the highs or the lows rather from August and this month. You could see some nice play off that 38.2. Support bounce, rebound, break, acceleration, resistance, breach, acceleration. Here's our first test. Okay, so adds further conviction, right? If we see a topside break above 111, 109.96, the risk is for a rally up towards that 11.25 level, which is the 618 retracement of the range. But ultimately, all things held constant, looking for exhaustion here. If we break the downside below 110.59, again, that's weekly open support, former resistance, right? That would open up that lower parallel. Once we get that turn, we'd reassess with a retracement here, see if we get any overlap. But essentially, that's sort of the game plan for me in dollar yen. Mike, dollar yen says, Dagon, would you go lower in time frame to pull the trigger or just use the 120 minute as the trigger? You just answered my question, okay? Right on, Dagon. Yes, absolutely. When we're actually executing, I'm much deeper. I'm looking for a 10 minute. I can get in as tight as a 5. When I'm trying to pinpoint entries, when you're working with a near-term price or when you're working with near-term strategy, you don't really want to stick in the longer-term charts for entries because, again, they'll be so delayed, and the range that we're looking to obtain or the profit target is so tight, you're kind of doing yourself a disservice. So yeah, you absolutely want to zoom in when you're looking for triggers, when you're looking for execution. So for example, Dagon, right here on this 10-minute chart, here's something I'd be watching. Near-term resistance trigger, support at 40 in momentum. If we see a topside pop here, maybe we get that final entry, that opportunity to fade, to stretch into 111, right? If this holds, we break 40 to the downside, we break trend, session lows, well then, at that point, you look for the pullback to resume. If you don't get the entry at that point, you don't get it, right? We have to stay disciplined. The ideal scenario is you get the stretch and failure. If you get the breakdown first, we'll try to fade a recovery, but you have to be pretty nimble on that kind of play. So again, I'm very hesitant to chase into the close of the weeks, guys. So if you're not in a position here, keep the powder dry. Let's see how we react into the US trade session on that high. And keeping in mind, again, there's the X factor of the US trade session on Friday with Jerome Powell. I hate these things where we get these commentary guys from central bankers or Jackson Hole. It's just, it's just a joker in the deck. You know what I mean? So try not to get too aggressive. Try not to get too aggressive. I don't suspect we'll get anything major as far as monetary policy outlook, but you never know. Hey, you're more than welcome to go on. By the way, quick reminder, I'll be doing a session on daily effects tomorrow for foundations of technical analysis. So obviously, we talk here every day. You can always ask whatever you want here, but I encourage you guys, if you want to join, if you have more questions on more near-term, like execution type stuff, tomorrow at 10 o'clock. Considering it has not gone over downtrend line on the daily from the July 19th, would you risk to wait 111 to go short, Marco? Considering it has not gone over the downtrend line. So are you talking about this? You talking about that? Yes, Marco. Okay. So I'll tell you why. I'll tell you why I'm not looking at that. It may never get to 111. You're right, Marco. It may never get to 111. I don't know that it will. But the reason I don't work with this slope is because you have no parallels to actually validate that slope. It's a 2-point touch, right? If this is a third point, it will be a third point, but we don't know until today closes. So you're working with a little bit lower of a conviction trend line. There's no slope parallels that actually work with this. So trying to connect any two lows to see if this slope has meaning or has validity, you can't find it, right? The one that we're working with on the operative is this one, Marco. So that leaves a little bit more room, right? And this slope that you look at right here actually is the same slope you're looking at right here. Now you might be thinking to yourself, well, this one is only 2-point touch too, Mike. That's true, but it works better with the gradient of the market. There's no 2-point touch on the lows. This one's not really a touch. If you connect that low, you didn't quite make it there, but it converges on a Fibonacci level or a split level, just a 50% retracement. Gives you a little bit more conviction. Look, Marco, at the end of the day, this is, this is trading, right? This is what we're trying to assess here. If you're concerned and you're working with that trend line, and again, maybe that's the one to work with, and we're not going to get the break, well, then your stop is against this high right now, no problem. To be quite frank with you, I would have probably taken that trigger in overnight trade on the downside as far as like the momentum divergence. What time frame was that on? That we were seeing on these last two highs. Price action stabbing right here. I probably would have gotten short in overnight trade if I was trading in Europe on this last stretch here with a stop against 111. Marco says, I did. Clear. All right, cool. I mean, then there's no problem with that, Marco. You want to keep your stop a little bit above the highs to give yourself some breathing room heading into the US trade session. But I just want to prep you that don't be too surprised if you see a 111 tag, right? Broke the weekly opening, broke the weekly opening range highs. Yeah, could get a little bit higher before we turn, but I'm not opposed to having a short position on already. I just didn't get entry, right? By the time I woke up here in New York, we were back off those highs. It's still not a bad trade, Marco, to be completely honest with you, even entry from here. I just think that you probably get another stab here. So you could look at something like this, 1 point, 2 point, 3 point, whether you want to call that or not. The break testing resistance, something like this would keep your focus again in time into the close, into the US Open essentially, right? Into noon here in the US. That still leaves the vulnerability for this thing to climb up this line, maybe touch that confluence, then move off again. The idea is look for failure. Might scale in at 111, says Marco. Yeah, it might be another opportunity to add to the position. You just don't want to get too aggressive here, Marco, because again, remember the longer term charts for dollar yen. Don't lose track of this. What I want to show you, the weekly chart. This is my issue. Okay, we rebounded off the 52-week moving average. We rebounded off a 38.2 retracement. So we want to be nimble here, right? If it blasts through 111 or it makes it through 111 on a close basis specifically for a daily close, I'd be a little bit concerned. All things held constant, I think I think it still looks good. All right, spend a good time on that, but good questions, Marco. I hope that offers some color here to your position. Okay, the conviction break would be 110.59 for resumption. So just keep that in mind. That is dollar yen. At this point, you can scratch this 100% extension. Let's keep things clean. Focus on those levels. No change to any of the levels that we added from yesterday. That's number 2. Number 3, Swissy. Really clean. I was surprised at how this thing reacted yesterday. So we've been following the dollar Swiss decline ever since the break of the consolidation region that we were following. We highlighted that last week. We've broke early this week at 98. It's basically the 99 handle, 98, 95, 99. 618 retracement, swing lows from last week, slope support, and the median line for this current operative formation off the highs. Break, acceleration, median line offered a little bit of a hesitation, but the lower parallel, what a touch. And this is why yesterday we were noting, it could get a rebound off the lower parallel today. Resistance was basically at that 786 retracement, 98.50 again. It's the 50 line, 786 retracement, and former swing lows, 98.45. We came right into this region, and that's where we failed. Okay, here's what it looks like now. So the levels are pretty clear. I don't think you get full on resumption here. The momentum signature, the way we bottomed out, I think you still look for, possibly another move here. Objectively, I don't know how to say this in a way that makes sense. For me, if you're not in this already, at this point, we're out, right? So the entry would be on a stretch break here back towards the median line. Or if we do break lower, I'd actually look to fade this if we get a divergent move back into slope support. The whole point being, Swissy on the longer term charts, you see this? It's a pretty big stretch. So objectively, you're bearish below 98.95 on the longer term. That's also the 100-day moving average. But from here, I don't know. The dollar, with the bounce that we're getting, it's been kind of pitiful. So, ultimately, near term, I think the risk is higher. I want to use that rally to get back short. The objective play is still to 97.84. That's the 100% extension. Former swing lows from back here in June of this year. And if you get a decent rally towards the median line in time heading into next week, you're basically looking, for that stretch into slope support. One thing I did want to check, bear with me one sec, is just objectively, if this is going to be a more concerted high for the rebound, what does the retracement look like? See if we get a 38.2 at anywhere interesting. Uh, 38.2 comes right back on 99 again. Okay, don't need that right now. Levels remain unchanged. I think the bounce gets a little bit, one more high or one more stab at the high, but ultimately we want to fade below the median line. So watch for a rally to fade in dollar Swiss. Really clean price action. So this median line we added yesterday, if you guys remember the previous update, we were just looking at the slope, right? Just basic slope. This is the same slope, right? So essentially all we did was broke this support. We've come into the lower parallel. And that's what we just rebounded off of last night. So maybe a larger recovery here if we break 98.50, look to fade towards 98.80 again, which is essentially where the median line comes into play. Questions on dollar Swiss? All right, that is number 3. I guess we'll come back to gold. Let's stick with the dollar crosses. Gold is, again, it's going to be real critical how we close the week. So I'll come back to this. Let's jump into the dollar crosses first. So here's euro at this point. Here's what we look like earlier in the week. The weekly chart here is just absolutely magnificent. 116.05 is what you want to look at heading into the weekly close. That's the level we need to beat. Here's what it looks like. That's the low close that we made for back here in the October-November decline. Basic slope resistance, a former slope support comes in just higher. The median line for the operative pitchfork off the 2015 lows comes in just higher, all the way into 116.50. So Euro's coming in some big, big levels of which would validate that a more concerted high, a low rather, is in place. Now, also on the weekly chart, we want to see a weekly close of this momentum trigger broken to the upside as it is now. Okay, we need to see a weekly close to validate that break and ultimate shift, right? Change in behavior for the momentum profile. So curb your expectations for euro long. You know, we've loved the euro long trade. We took a nice bite of it, but this is where we want to curb our expectations. Risk for a pullback here. Wouldn't be too surprised, right? You're still constructive above 114.50 objectively, right? Objectively. So the weekly chart, pretty clear on euro. Daily chart looks like this. Okay. The descending pitchfork we've been following, just the near-term slope right here, very similar to that in dollar yen. Consolidation pattern, remember that triangle? Break, we saw it test as resistance. If we rebound here again, that same slope converges on downslope resistance, and that leaves us 116.50, 116.60 again. Okay, again. So here's the slope trigger that gave us the downside break early in the month, right? Not surprising. Could see a little bit of a pullback here. Constructive above. Essentially 115 is where I want to see this thing kind of curve out, but 114.50 is bullish inval for the longer term. Euro on the intraday chart looks like this. So near term, it's kind of been kind of hard to play since yesterday. Ever since the break here, the previous day, this was from Tuesday's update, excuse me. We talked about the fact that, I'm not really looking to play this beyond 116. This is kind of where it gets hairy. You saw a topside breach, 116.20, and here we are back below. There's that parallel again, catching resistance. So guys, the setback for me would be to look for the long entry near 115.10. Okay, 115.30. That same level that we were looking at earlier in the week is still what I want to see. For possible exhaustion, if we breach higher, 116.50, 116.60, absolutely critical. Absolutely critical. That's sort of your breakout zone to really validate that there's much more significant low in place for euro. That being said, I'm on the lookout for a pullback. Questions on euro? Yeah, it might be a stretch. Little head and shoulders points to 115.10. Sure. Yeah, you can make that assumption. Real near term. Yeah, I can see that. What I want to see is so when you get validation of a near term high, the first inherent sort of thing that pops up in my head to do is just look at the extension, see if you got any measured moves here to the downside that converge on slope. So, that would suggest, and the reason I didn't draw this earlier, guys, because I don't know that this is a concerted high, right? We haven't broken any former swing lows, even on the near term chart, to sort of give me that indication. And the fact that 115.10 is already highlighted. So for me, I don't want to add significance to something that might not be valid. So I'm watching that region anyway. It's interesting that slope kind of converges there. If this is going to be a near-term concerted high, the 100% measured move correctionary would take you back into 115.10 anyway. So all those factors lining up, Ty, just more conviction on it, right? More conviction on it. All right, so that is euro. Any questions? See if the dollar can't get a little bit more of a reprieve here from the recent selling pressure before resumption. That is number 4. Number 5, Aussie, also snooze fest. Here's Aussie. It broke to the downside. There was a short play. I'm, kind of ticked off that I'm not in it, but you guys know the level. Ty, I know you know the level. I think everyone else in the room knows the level too. It was 73.27, 73.36. It's the level we've been watching for over 3 months. We broke back below it. And as I said, guys, when you see these key thresholds break, price is not going to like dilly-dally, right? If it breaks, it's going to see acceleration. Don't believe me? Here's the break, acceleration to the downside. Here's the breach, acceleration to the upside, bounce, here's the break, acceleration to the downside, right? It's just a pivot in price, clear and simple. No need to complicate things. So once we broke 73.27, inherently, your focus shifts lower. Now, was there an opportunity to get on the entry for the short side? Well, not really. If you were really quick, maybe. I was looking at this earlier today when I woke up to see if there was an opportunity. The only thing that looks like it would have given you a little bit of a play is this near-term consolidation in price, which did break to the downside, but still, I wouldn't have sold into that key support. So from here, you're looking for 72.52, 72.30 to the downside. Resistance is 73. Bearish invalidation gets dropped right back to 73.36 once more. Okay, bearish invalidation, interim, near-term target. Boom. Don't want to chase the short side from here. Here's Aussie from earlier in the week. Don't want to chase the short side from here. The whole premise of this trade that we talked about on Tuesday was the fact that, look, we're coming into near-term resistance. We highlighted 73.74 a while ago, and you were seeing some divergence in price, right? Price action with a lower high, or oscillator with a lower high, price action with a higher high. So the exhaustion trade was upon us, right? And the divergence had us looking for the risk for a pullback. The key level was still 73.27. Guess what? Didn't hold. You're objectively looking lower. Don't want to chase this. Do not have no interest in chasing this at fresh weekly lows on the short side. If you're holding a short on this and you got into the position, I would kind of hold on to as much as I can. Initial support 72.52. Take something off, go break even. But anything northbound of 73.36, I would have my limit in that, or my stop rather, in that area. Because if it pivots back above, objectively shift our focus higher again. Here's the Aussie dollar on the daily. Now, interestingly enough, some of you, I think Dagon or someone in the room was talking about this. We were talking about it on in the webinar early in the week, and someone was talking about looking at this slope, in which case that might have been a clip of resistance. Also possible. Also possible. In any event, risk is lower. Low day close is 72.38. That's the conviction break that would mark resumption. If we push below the low day close, right? Targets at 72 and 71.37, 71.45. That's the measured move. Questions on Aussie? Kind of a disappointer, right? And again, basic stuff, objective stuff, where it kind of takes emotion out. You're wondering, we're making it back below 73.36. Is this the real deal? Is this a fake out? Looking at the daily chart, that momentum trigger looks like a hold. Looks like a pretty strong hold to me, right? Now, we have no way of making that assumption until we get today's close, right? Because if this reverses back above 73.36 today, momentum could still plow right through this. But all things held constant, if we close at these levels, that's definitely a false break of a key pivot in price. And this is exactly what false breaks looks like, guys. Had me suckered in, right? When we got that close here on the 21st, I'll be the first to tell you. You know, it's the first initial opening range lows, but hey, we broke back above that key pivot. Stay constructive. Well, break back below invalidates that idea. And again, keeping in mind where we are in the broader picture for Aussie, here's the weekly chart. We really needed to see that recovery back above 73.27 on a weekly standpoint. Look how many weeks that held the low to validate a little bit more of a recovery. All things held constant, this is a pretty bearish development. Questions on Aussie dollar? Keep in mind, guys, we talked about dollar yen earlier. You do get a CPI, Consumer Price Index, out of Japan tonight, expected to print of 1% from 0.7%. Now, the concern about increasing inflation in Japan and its impact on monetary policy there. I read some central bank research earlier today. A very low expectation that they'll actually do anything from the monetary policy front. So, unless you see a major print excess of 1%, I don't think the BOJ is going to be looking tightening anytime soon. All right. Kiwi. Peter, this is for you, man. Here is the New Zealand dollar. Then I do want to jump into gold. Really important. I don't want to forget gold today. Here's New Zealand dollar. So we came into resistance. 67.20 was the 618 retracement of the advance off the 2015 lows. The high that we registered this week was 67.20, right on the button. Okay, so it was the area of resistance that we were looking at. The fact that we're failing there, here's what the daily chart looks like. Okay, 67.15. I think it's the same retracement, guys. There's a mispin or a tick off on the weekly and daily charts, but same level, right? Former swing lows, you touched right onto it. This is near-term support at 66.60. It's a level that we've been watching. When we broke through it on the way up, Pete, there was acceleration right into the highs that we just made. It's also former slope. So the same operative slope we've been following off the 2017 highs, right? Caught the lows, break, acceleration on both sides. That's where we are right now. So watch 66.60. Okay, momentum failed again ahead of 50, well ahead of 60, obviously ahead of even 50 here on this last turn. So I don't really know how to play it, Pete. To be completely frank with you, the focus for me is this range immediately. Okay, if this breaks below, which I don't want to say I favor, but I expect it will, just because of the way that Aussie has performed. If we do see the downside break below 66.60, at that point, man, we could be looking at a full-on resumption back lower. All I have to say is right now, my focus is on 66.60. Okay, here's the intraday chart, Peter. Maybe this will help. So remember the update that we had earlier in the week. We were looking at this and we were highlighting this 67.15 level. Okay, the 67.15, 67. What was it? 07, 67.05, 67.15, right? As a key pivot in price. He had a beautiful confluence. I love these confluences. 100% extension, 618 retracement. And we came right into that, and here was the failure. The focus was on a pullback and support, 66.75. I had bullish invalidation for you guys earlier in the week, guys, still at 66.60. And we're testing that level now. If we get below 66.60, I mean, you'd have to be looking lower, Peter. You'd have to be looking lower. How you trade it from this point, I have no setup. There's nowhere to put a respectable stop. Maybe against session highs for Asia, but even then, as a stretch at this point, you're selling into the lows. The next sort of reprieve area, the area of support, you'd start to look for a possible bounce is 66.38. That's the weekly open. Now, see the divergence in price, right? Aussie, well below its weekly open. Kiwi, still's got a ways to go. Still's got a ways to go. So for me, there's just no play here. There's just no play here. Okay, thanks. Below how far? Below how? Peter, you want to? clear that up for me? I'm not sure what. So the immediate focus, Peter, is on 66.60. Okay, if that breaks 66.38, that's the last ditch effort. Below 66.38, you're looking on full on resumption. That would even be a median line break too. Here, we can clean this up a little bit. 66.60 break. Yeah, so that's the near-term support right now, Pete. If that breaks, I don't know if you'll get a chance to get a short in, but the level of which you'd look for a possible exhaustion, if it's gonna rebound, would be right here. Weekly open support, median line support, former trend line resistance, turn support. Make that red. Make sense? He says yes. Okay, cool. Cool. Let me just see what this looks like. Mm-mm. So 1618 extension gives you 66.50, but yeah, I mean, you're splitting hairs at this point. Yeah, there's no trade here for me. I mean, I'll watch to see if we get exhaustion down 66.40, but if you're not short already, you're chasing here. You're chasing. Peter says yen at 110.90. Okay, is it? Oh yeah, nice, nice. Yep, here we go. So I mean, the 50 comes in at 110.96. That's the actual, considered 50 of the drop of the year of the August range thus far, and also trendline resistance. So um, basically, I'm looking for exhaustion right here. We might actually get an entry right now. Let's see how this. Okay, 20 minutes to the U.S. Open. Questions on Kiwi? Okay, let's move right on. I have to cover gold. Look, um, I'm all hot and bothered about gold just because we've been tracking this so closely, and the rebound was super, super clean. And we identified yesterday an area of which, look, if we're going to see a near-term exhaustion, this is the first area to look. Weekly chart resistance, basically looking at the underbelly of the slope for here. This is the same parallel of the operative slope from the 2013 low, okay? Caught the highs in 2015, 2016. Here's the low that we rebounded off of last week. This is your first area of resistance. Former slope, okay? This not really the main focus. 1204 and 1209, that's weekly resistance, okay? Daily chart looks like this. The median line for the current operative slope we've been following just off of this year's highs. Ready? Resistance, lower parallel, perfect support. I thought we were going to get a stretch a little bit higher, but a pullback's a pullback. Objectively, I want to stay constructive above 1180. Bullish invalidation, 1175. Topside objective targets, 1205 on the near term, and then 1215, 1214. Okay, keeping in mind that you have some interesting levels there. The low day close from back here in July, the actual stretch low from back in May, the 618 retracement, right, of the 2016 advance, the late 2016 advance. So there's a lot to look up there. But first things first, on this initial pullback, might have a little deeper to go. Want to stay constructive above 1180. Momentum on the daily chart also made a concerted close and breach and close above resistance trigger, a 3-point touch. So, the picture looks like you have a little bit more of a more significant, let's call it, low in place for gold, at least on the near term. So if we get a jackknife lower, you still want to look to fade that. A breach above 1204, in my opinion, gets this going. For those subsequent upside targets, again, 1204, 1215, 1214 is going to be your next upside immediate level. The monthly open comes in right on the 50 line. I just had to highlight that. Okay, it's basically 1224. Yeah, 1223. So that's sort of the expectation here for gold. Here's what it looks like on the intraday chart, right? We highlighted this near-term channel for this exclusive reason to show you that if we get the downside break, look for the correction. Well, we got the downside break. So here's the correction. Here's the update from last night. Again, daily chart, weekly charts and daily charts unchanged. We're simply coming off this level right here. Intraday, we were looking at this channel, saying that the price looked a little vulnerable heading in 1204. A break below 1192 would give us the pullback in price. Here it is. Don't get too aggressive. For me, I'd be more interested in looking for this pullback to get back on the long side. Let me snap this pitchfork. There we go. All right, perfect touch. Turned right ahead of 1204. I think you get a little bit of a deeper pullback here before all is said and done. The 50% retracement of this near-term advance converges more on that 1180 level, which we're watching anyway. Real clean price action. Real clean price action. And again, I was looking at sentiment earlier. It's something that just to give you kind of a tell of what price action is doing. Shows us that there's a pullback, right, in the extreme gold long positioning. And those extremes, the pullback from the extremes, that's when you want to use that as a sort of a bias indicator. Because traders have been net long gold for a long, long time, guys. Here's what it looks like. Okay, here's the chart. This is IG's client positioning. You can see that, traders net long have been insane long for quite some time, coming off extremes we haven't seen in over a year. Okay, here's the pullback as price is bottoming out. That's a positive thing, right? That's a positive thing. So we also went over earlier in the week the fact of the 6-week decline, and the consecutive decline indicator suggested that last 4 times that we've seen 6 weeks or more, 2 of those were 7-week declines. They were followed by 10% rallies or more, right? So there's room here. Add to that, the final thing that we discussed this week was the fact that the IDO search pattern recognition continues to highlight gold, guys, as an outperformer in both the 5-day and 1-month projections. Okay, really heavily skewed to the upside. So we have a lot of things that are continually favoring gold finding a low here. I wouldn't put all your eggs in the basket, but again, for me, 1175 is my line in the sand. Ideally, we hold 1180, and as long as we do, I think you look for a larger recovery in gold. Immediately heading into the U.S. session, heading into the weekly close, wouldn't be surprised if this thing settles down a little lower. And that shouldn't be surprising to anyone, right? Because that kind of matches with the dollar bounce that we were looking at, kind of makes sense with the euro pullback that we're looking at on the back of this stretch. Maybe a little bit of a setback in gold deeper before we resume higher. Any questions on gold? All right, that is number 7. Let's just touch, I guess, on dollar, CAD, and sterling. I'm not really a fan of. I'm a big fan of it, let's say, but I mean, I guess Jamie's got a better handle on this than I do with the dollar CAD position. I guess the only thing I would want to highlight to you guys here is just the basic slope that we've been following off the yearly highs. It's pretty clean. Okay, the pitchfork, you got a couple run throughs, but on the extremes has been spot on. Resistance, third touch resistance late last week before the breakdown. On the underbelly, lower parallel caught support, real clean, median line. A little bit of a mess there, but the break, acceleration, support, that gives us, again, near-term support at 130.07. But it just says that right now, you're checking the 50 line as resistance again, and you have seen reaction there. Resistance, resistance, breach, acceleration, or breakdown, acceleration. Here's failure. Like, what do you do with that? What do you do with that? We made it through the weekly open, um, but here's 30.67, a clear pivot in price and median line resistance. I just don't have a play on it. I mean, Jamie's entry would have been spot on if we had gotten that move into 130. Hmm. Interesting. Interesting. This might be a decent fade opportunity, actually. Hold on. Um, Yeah, no, I don't want to fight that. Look, 31 is going to be sort of your big figure number, but look, the reason would be hesitant to fade this is because of where and when this happened. So the reaction that we got yesterday, you guys remember Jamie even tweeted it at the moment as it was testing monthly open support. He said this is make or break moment. I couldn't have agreed with him more. We broke below it. It accelerated, but then it quickly fizzled out and came right back. Once we got back above 130, um, I didn't even want to look at this. I did not think we were going to get quite this rip, but here we are. Now, objectively, the weekly opening range high is just higher. 131 matches up with a couple of different fibs, including the 618 of the recent decline. So 31 for me is going to be um, sort of near-term breakout in dollar CAD if you get it. But a low conviction on dollar CAD. The only thing that kind of really was the focus was this bounce off support, and we talked about this on Tuesday. Watch 31 resistance if this is going to hold. That's dollar CAD number 7, 8. Also, just want to quick glance sterling into the close of the week. The daily chart is wicked. Nothing here that really kind of brings my attention or gets my appetite wet. The only thing I wanted to show you was this, the intraday chart. You remember this yesterday, guys? We just threw on these slopes. We literally just threw them on, and they've continued to play the entire week. Ridiculous. So, here's near-term slope support. Um, I do think you get the crack lower, and I do think you get the setback. Now, if we get into 2788s, 2775s, and it starts to fail, I would love to fade a move there, but that's sort of the only play I have for sterling. Here's the retracement of the near-term advance. Now that we've kind of made a little bit more of a concerted turn, you can see it doesn't match up too well, but that whole region just below 128 is what I would love to see hold for sterling if this thing has put in a low. Maybe something like that. Could be the play. Talking real near term now. Ultimately, I do like this higher. I just think near term the risk is for that washout before the rebound. So we'll be looking for watch 28 30. You know, will be an initial area to start to look for. You got that former swing high from earlier in the month. Then you have that 100%. If it's two equal legs down, maybe just a correction. That's kind of where you want to bottom out. Ultimately, for this one, it's just about waiting for the setback. I'm not really trying to get too involved here. I know that this is the level Jamie specifically was looking at, 2850. So watch this. Watch this for failure. I don't like that reaction we just got off the slope. So I do think it cracks. But I'd look to fade weakness into 128 if we get it. Okay. That December 2016 high is still going to be the line in the sand. It's still the line that's highlighted here on the daily chart. 2775. That's the max drawdown I'll want to see on sterling if we have put in, if this is a false break of the lower slope, which I'm hoping it is. Okay, that is number 8. And guys, that's everything I have on my end. Let me know if you have any other questions heading into the close of the week. Again, you have, on tap to Friday, Jerome Powell at Jackson Hole. Keep your eyes peeled for headlines on that. Here is the SPX. We've been watching this one closely. Pete, I know we were looking at this earlier in the week, man. We weren't too far off, right, with that with the resistance call, right? It's still there, guys. On a closed basis, this has not been invalidated. Here it is. I just laugh when you look online, and Twitter is just a polluted place these days, guys. But in general, market moves, it bounces. You see all these people get super bullish, super bearish on a day-to-day basis. Objectively, it's still right there. It's still right there. 2860. We haven't been able to clear it on a daily close basis. Resistance is resistance. Period. End of conversation. Full stop. Can you comment on the last 3 days of Euro Aussie? Yeah, sure, Marco. Do you know what time he speaks Thai? Yeah, it's 2 o'clock, 2 p.m. Eastern on Friday. That's when Jerome Powell will be making his comments at the Jackson Hole Symposium. Can you comment on Euro Oz for the last 3 days? Yeah, sure. Any questions on the SPX? Nothing to do but watch 2860. 2876, the actual stretch high for the year. Recall that we just turned from that earlier on this last breakout. So that converges still on slope. So even if we do get an intraday break, don't chase. 2876 would be the actual break into fresh record highs. And on top of all of this, guys, we are, this last high wasn't divergence, but be mindful, right? Be mindful. This was a divergent high. Although we didn't get a higher high in price, we did get a lower high in the oscillator. Not really a tell, but certainly something to keep an eye on. We want to go over Euro Aussie. By the way, guys, has the audio and the video been fine? We had good, no issues with that anymore? I think they finally got their act together over here. Marco, thanks. This is fine. Wow. Wow. Well. What do we have here? Man, this just skirted below our vision the entire week. How did we miss this? This is a clear breakout of downtrend we've been following, obviously. Okay, so this is a basic pitchfork off the highs that we made back in July and, well, both of the highs that we made in July. You can see that the 618 line, if I recall correctly, yes, 618 line of the lower parallel caught the lows perfectly, rallied into the 618 upper parallel. Then things got messy, and this is where we lost our interest, I guess. You can tell where the lines drop off. Once we broke that support, it kind of held, made a new low. Here's the breach. and we're off. We're off to the races here. So give me a second here, Marco. Let me kind of reassess this. This retracement's null and void. That retracement's good. We'll leave the 618. That's null. What a fake breakdown failure, says Ty. Was that you? What a fake breakdown failure? Yeah. So remember we were talking about this range? I remember this one vividly, guys. We were talking about this range forever. And then we finally got the close below 57.28. Yeah, that shifted our focus lower. But guess what, Ty? Both of the first targets hit. The only target that didn't hit was the 55.10 target. So here was the 2017 high day close, was a pivot in price, something we've been watching. That actually ended up being a really decent support on a close basis. But even on the stretch, the 50% retracement at 55.83, the low that we registered was 55.80, literally. So the play was good. And this is, again, the benefit of having a near-term strategy. You know, a lot of people would look at this and they'd hold on for the measured move of the range. They'd be waiting for a longer-term decline. We're nimble, right? So look, objectively, this is a break of the monthly opening range high. I wouldn't try to fade this. I don't have anything here. I think you could get a pause at basic trendline resistance off the yearly highs. Sure. I bet you 786 or 764 actually probably comes up not too much higher. No, it's still a ways away. Here's your high day close. This is going to get messy. Just bear with me 1 sec. I want to see what this will look like. Okay. I don't really have a play on this one right now. I will continue to track this. You got me all interested. This is it's a simple breakout. You're just testing the range highs here, but even for the range highs, you're breaking out. So you're deep in overbought territory. If you've got longs on the play here, don't touch it. Now you might see a near-term interruption at this basic slope resistance off the yearly highs. So I would not be surprised to see a pullback, but northbound of 57.28, it's a constructive trade, period, end of conversation. I was just curious about your comments on the uptrend technically. So listen, you haven't dispelled the yearly, the decline off the yearly highs. That's what I want to say, Ty. So you're absolutely right. The broader uptrend is still intact. This is the broader uptrend that we're talking about from the 2017 lows. Okay, boom. This is a daily chart. So we've been in correction off the yearly highs. That downtrend wouldn't be validated till you break this slope right here. So immediately heading into 59.20, 59.10, could see a little bit of a kickback. 57.28 is the level of support. And this is the breach that you essentially need to clear the way for resumption of the broader uptrend. Marco, does that help? Make sense? Interesting pair, Euro Oz. I'm gonna keep an eye on this one. He says yes. Okay. Okay, I think I got everyone's questions. That'll wrap it up for today. I want to wish you guys the best of luck trading over the next couple of days. Watch Jackson Hole. Again, I really can't stress enough. I have no clue what this guy's going to say, and he's got the propensity to really move things. So whether he is shifted by Trump commentary or not, or any of this garbage, who cares? We'll see how it pans out. All things held constant. Dollar looks primed for a little bit more of a bounce, but I wouldn't go chasing it, guys. We are looking for failure here. And again, that dollar yen, watch 111. 110.94 is what we're trading at now. We're not too far off. US trade session just kicking off right now. So let's see if we can get failure in the next coming hour. Best of luck trading, guys. Have a great weekend, and I'll see you tomorrow on Daily FX. Till then, best of luck trading. Cheers.